Good morning students. Today we discuss about 11th commerce subject morning video. In this video we start a new chapter, that is sources of business finance. First we discuss about the meaning and definition of business finance. So the term business finance denotes the economic resources employed in business enterprise. What are the business activities are going with the economic objectives? Health activities of the business is considered as business finance. So this term include money and credit employed in the business. Business finance is mainly concerned with the arrangement of cash and credit for the business enterprises to carry out their day-to-day operation smoothly. So in order to earn cash and credit activities, so what are the arrangements made by the business in order to earn these two aspects in a business concern? It is called as business finance. So definition point of view, the finance function is the process of acquiring and utilizing funds by a business. So funds will be acquired by the business, and how these funds will be utilized in the business, it is called as finance function in the business activities. Next, nature and significance of business finance. So nature of business finance point of view, so business finance enterprise of all type of funds, namely short term, medium term and long term, used in the business. So three term finance, short term, medium term and long term, it can be used in the business. All types of organization, namely small, medium and large enterprises, require business finance. So what are the business activities, whether it may be a small size or medium size or large scale enterprise, these three business organizations will earn finance. The volume of business finance required varies from one business enterprise to another business, depending upon its nature and size. So the amount of business finance required differ from one period to another period. In other words, the requirement of business finance is heavy during the peak seasons, while it is at low during the dull seasons. So the amount of business finance determine the scale of operations of business enterprise. So business finance will be depends upon the whether it may be small scale or large scale or medium scale of business finance. Significance of business finance point of view, a firm with adequate business finance can easily start any type of business. Business finance helps the business organization to purchase raw materials from the supplier easy to produce the goods. And then the business firm can meet financial liabilities like prompt payment of salary and wages expenses in time. They should need financial support. So the sound financial support enable the enterprise to meet any unexpected or uncertain risk arising from the business environment efficiently. Sound financial position empower the enterprise to attract talented manpower and introduce latest technologies to increase their business finance. There are three sources of business finance. So on the basis of a period, there are short-term finance, medium-term finance and long-term finance. Short-term finance point of view, loans and advances. So by this way, the business will get a finance. Loan is a direct advance made in lump sum, which is credited to a separate loan account in the name of the borrower. So the borrower can withdraw the entire amount in cash immediately. So it can be repaid in one or more installments. but the interest on loan and advance is calculated on the whole of the amount borrowed right from the date of sanction. So it may be secure or unsecured. Loans and advance are usually sanctioned by pledge of specific asset. So loans and finance is one of the business finance by way of a short-term period. Bank overdraft. It is another way to get business finance by the business people. So bank overdraft refers to an arrangement whereby the bank allow the customer to overdraw the required amount from its current deposit account within a specified limit. So interest is charged only on the amount actually overdrawn. Next, discounting of bills. When goods are sold on credit, the supplier generally draw bill of exchange upon customer who are required to accept it. So the duration of such bills of exchange may be ranging from 15 days to 180 days. So instead of holding the bills till the date of maturity, borrowers generally prefer to get them discounted with the bank. So it is another way of getting finance. Discounting the bills in the bank and get money immediately. So the supplier will not keep the bills for a long period of time till the maturity period. If they need the cash means they can immediately discount their bill with their bank and get immediate cash. Trade credit. It is also one of the short-term duration business finance. Trade credit is the credit extended by the one trader to another for the purpose of purchasing goods and services. So purchaser need not pay money immediately after the purchase. Such credit appears in the balance sheet as trade creditors or accounts payable. So trade credit is very simple and convenient method of raising short-term finance. There is no formality involved in availing this facility, and there is no need to give any security for trade credits. So it is one of the best way of getting short-term finance. Whenever purchaser purchases goods, they may not pay cash immediately, they can pay it in later. Pledge. The customer transfers the possession of an article with the creditor, that is a banker, and receive loan. So till the repayment of the loan, the article is under the custody of the banker. If the debtor failed to refund the loan, the creditor, that is the banker, will auction the article, pawn, and adjust the outstanding loan from the sale of proceeds. So pledge is another way of getting short-term finance. We can pledge the article in any bank and we can get a loan amount. So after the repayment of the loan amount, the pledged articles can be collected from the bank. Otherwise, the banker will make an auction sale and sale proceeds amount will be utilized for the outstanding loan. Hypothecations. This is loan taken by the depositing document of title to the property with the banker. Of course, the physical possession of asset property is with the borrower. If the borrower failed to repay the loan amount, the article hypothecated will be sold in auction by the banker. Business people hypothecate goods or equipment to get this type of a loan, and it is a loan taken on the security of movable asset only. Mortgage. This type of loan taken from the bank by lodging with the banker title deeds of immovable assets like land and building and any other immovable asset. So business people raise loans by depositing their title deeds of the properties with the bank. Loans against securities. Bank accepts various types of securities like fixed deposit receipt, book debts, insurance policies, supply bills, shares, debentures, bonds of the company, document of title to the goods like railway receipt, bill of lading, trust receipt, warehouse keeper's receipt, book debt, and so on. So with these documents, we can make a security of this document to the bank and we can get short-term loan. Clean loan. Bank provide a clean loan to certain customers of outstanding credit worthiness on the basis of their character, capacity, and capability. So it simply grant loan without any physical security. In other words, clean loan is loan given without any security or with a personal security. So clean loan is also one of the short-term period loan borrowed by the business people from the bank. So it is a loan given to the business people or any other person without receiving any security by the bank. Commercial papers. Commercial papers is an unsecured money market instruments in the form of a promissory note. So corporate and primary dealers and all India financial institutions are eligible to issue commercial papers. So it was introduced in the India in 1980 under section 45W of the Reserve Bank of India. So it is issued by the firm to raise funds for a short period. It can be issued for maturities between a minimum of 7 days and maximum of up to 1 year from the date of its issue. And the next one is hire purchase finance. So it is also one of the short-term period finance. Small-scale firms can acquire industrial machinery, office equipment, vehicles, etc. without making full payment through hire purchase. So with the help of asset acquired through hire purchase, they can produce and sell. So from the earnings, the amount will be paid in installments. So ultimately, the ownership of asset can be acquired. Now several agencies like national small industries corporations provide machinery and equipment to small scale units on this hire purchase method. Factoring. Factoring is one of the method of raising business finance through sale or mortgage of book debts. So under this method, business concerns sell the accounts receivable to a finance company called a factor at a discount. So all the book debts can be make a discount in this factor. That is, the factor means the person who lend amount by way of keeping the book debts as a collateral security. So these are some of the important short-term business finance to get a loan amount. So with that we conclude this video. We can continue the same chapter in next video. Students, you can go through all the points which are taught in this video and write it in your commerce assignment notebook and send a task complete message in the group. Thank you.